Hi everybody, welcome to Jin's Wall Street News. The U.S. Census Bureau and the U.S. Bureau of Economic Analysis reported Wednesday that the U.S. trade deficit jumped 24.7% in December from a month ago. According to the S&P Gloabl, the U.S. Services Purchasing Managers Index fell from 56.8 in December to 52.9 in January. Atlanta Fed's GDPNow estimates U.S. real GDP growth at 2.9% for the first quarter 2025. 10-year Treasury yield falls to 4.42%. For the U.S. stocks, S&P 500 rose 0.39% and the Dow Jones Industrial Average gained 0.71% Wednesday as 10-year Treasury yield decreased. Qualcomm announced its earnings on Wednesday after the bell and said it expects current quarter's revenue to be between $10.2 billion and $11 billion, up 13% year-over-year. The U.S. Census Bureau and the U.S. Bureau of Economic Analysis reported Wednesday that the U.S. trade deficit jumped 24.7% from $78.9 billion in November to $98.4 billion in December. Exports decreased 2.6% from $273.6 billion in November to $266.5 billion in December, while imports increased 3.5% from $352.5 billion in November to $364.9 billion in December. According to the S&P Gloabl, the U.S. Services Purchasing Managers Index fell from 56.8 in December to 52.9 in January. But as you know, a reading above 50 indicates an overall increase compared to the previous month. The S&P Global said, quote, "The U.S. service sector remained in growth territory at the start of 2025, despite posting weaker rises in both activity and new orders. Companies expressed confidence in the outlook and took on extra staff to the largest degree in more than 2.5 years. Meanwhile, inflationary pressures strengthened," unquote. According to the Federal Reserve Bank of Atlanta, GDPNow estimates U.S. real GDP growth at 2.9% for the first quarter 2025, down from 3.9% on February 3rd, updated based on recent economic data such as the U.S. trade deficit and U.S. services PMIs. 10-year Treasury yield had risen as U.S. manufacturing PMIs came in stronger than expected, and construction spending also gained 0.5% in December, above expectations. But it began to fall on Tuesday morning. Then it decreased further as the number of job openings decreased to 7.6 million in December, and the U.S. factory orders fell 0.9% in December. 10-year Treasury yield continued to fall on Wednesday as the trade deficit jumped in December and the U.S. Services PMI reported a slowdown in January. In addition, the U.S. Department of the Treasury announced Wednesday, quote, "Treasury anticipates maintaining nominal coupon and FRN auction sizes for at least the next several quarters," unquote. This announcement also relieved investors in the U.S. Treasury markets. For the US stocks, S&P 500 rose 0.39% and the Dow Jones Industrial Average gained 0.71%. The tech-heavy Nasdaq added 0.19% Wednesday. Big tech stocks mixed on Wednesday. Shares of Alphabet tumbled 6.94%, while Nvidia stock jumped 5.21% after Alphabet reported earnings on Tuesday after the bell. Shares of Qualcomm fell 4.6% in extended trading on Wednesday, even though the company beat on the top and bottom lines. The company reported $11.7 billion of revenue for the previous quarter, up 18% from a year ago, higher than expectations. Adjusted EPS was $3.41, up 24% year-over-year, above expectations. When it comes to the guidance, the company expected current quarter's revenue to be between $10.2 billion and $11 billion, the midpoint of $10.6 billion, up 13% from the previous year, better than expectations. Qualcomm CFO Kash Pakiwala talked about the guidance, quote, "For the second fiscal quarter, we are forecasting non-GAAP revenues of $10.2 billion to $11 billion. In QTL, we estimate revenues of $1.25 billion to $1.45 billion, reflecting normal seasonality for handset units. In QTC, we expect revenues of $8.9 billion to $9.5 billion with strong year-over-year growth across handset, IoT, and automotive. We expect QTC handset revenues to grow by approximately 10% on a year-over-year basis, including the benefits of increased shipment for Samsung Galaxy S25 smartphones. On a sequential basis, the decline in QTC handset revenues is primarily driven by seasonality and shipments to Apple. We expect IoT and automotive revenues to grow by approximately 15% and 50% respectively versus the year-ago period, driven by the strong product momentum, unquote. Okay, this is the end of today's news. Thank you for watching. Have a great day.